Monday, April 7th, 1:30 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. First trading day of the new week. Good look at the Magnificent Seven. They are part of the NASDAQ 100. The NASDAQ 100 is a stock index of 100 companies. It's not the same as the NASDAQ Composite. These Magnificent Seven represent the largest weighted average of the NASDAQ 100 and many investment stock funds. On the left, we have a watch list. The top watch list are stock indexes. On the top left, you see the NDX. That's the NASDAQ 100. It's green. It means all that it's higher than it opened. That's all. Bottom watch list, Magnificent Seven. Alphabetic order. See some green, some red. Red, obviously, is they're lower than where they opened today. It's not a buy signal. It's not a trade signal. Let's go to the charts now. First, the NASDAQ 100. Three grids, far right, 5-year monthly, the middle, 1-year weekly, and the left, 3-month daily, NASDAQ 100. On the far right, new low for the year. Since the beginning of this year, the trend has been down, lower highs, lower lows. Bearish. Middle chart, weekly, 1 year. Yep. We already took out the low of last week. Lower low, lower high. Green candle, sure, doesn't close till 4 p.m. We also broke this swing low here, this purple line. And now we broke this key support area here too. And on the daily chart on the far left, we also, new low, broke out that swing low. For me, there's no reversal signal yet to want to enter. Expect more downside. Again, the monthly, the weekly, and the daily on the far left. Now we'll go to the alphabetic order, Magnificent Seven. Identify if there's anything better. First is Apple. Yep. So on the far right, you notice it's performing new low for the year, and it never took out the high of last year. It's underperforming the NASDAQ 100. The middle chart weekly, again, new low for the year. It also broke this midpoint right there, that red horizontal line. Broke it. Daily chart far left. Yep. Huge move down. On to the next. Amazon, the far right chart. See this orange dotted vertical line? That was when it was added to the Dow Jones Industrial Average. So this company is on several stock indexes. You can also see the trend is down. New low for the year, as well as it did make a new high for the year up here. Middle chart, we already broke the weekly. Yep, broke below last week's low. And we're here. See the swing low in the middle chart, purple line, that swing low, midpoint. We're testing that right there. And the daily chart, yep, new low. On to the next. Google, company alphabet. Monthly, far right, yep, new low for the year. The trend is down. And the middle chart weekly. Key level, we broke below it, closed below it, that green horizontal line. We also have a gap. See these orange lines? We tested it, and we filled it. Took a long time. Gap was all the way back here. So this was a swing low. The middle chart we're looking at, Swing low, broke it, close to below it, and a gap there finally got filled. The trend is still down. The far left chart, same thing. Today we filled the gap. Trend is still down. That was Google. On to the next. Meta, formerly called Facebook. New low for the year. Look at the monthly. Yep. Lower highs, lower lows. Same with the middle chart, weekly. We took out last week's low. Also broke the swing low here from last year. And look at this big green candle, midpoint last year. We're testing it. That's where we're at right now. And the daily chart, new low. Yes, right now, this is considered a engulfing candle, bullish engulfing candle. And we have gaps up here. Potential reversal on some of these. And smart money, more likely, will be looking for these reversals to short at highs. Meaning, again, trading bearish at the highs. Some of them are expecting further downside in the stock market. And they're not shorting on the bottom. They're shorting on these retracements higher. That was Meta. Let's go on to the next. Microsoft. Look at the chart on the far right. This month of April, we broke the low of last year. The trend is down. And plus, we didn't even take out the high of last year. So it's underperforming the NASDAQ. Yep, it's performing worse. The middle chart, we already broke the low of last week. And tested that key level. And the daily chart, deeply down. On to the next. NVIDIA. Orange vertical line, and when it got added to the Dow Jones stock index last year. And again, new low for the year. Look at the monthly. Lower highs, lower lows. Middle chart. Broke the low of last week. We took out the swing low. Again, this orange vertical line is when it got added to the Dow Jones Industrial Average. And the far left. Look at that swing low. Broke that swing low. Let's open this further for a year. There it is. There's that swing low from last year. And we broke below it. I'm going to keep it on there. Just to be aware during the week. See if we're going to close above or below it. That's a key level. That's when a lot of buyers were here last year at the low. And now we broke it. Again, the day's not done yet. Let's go look at the volume here to see how things are going. Back here last year at that swing low, the volume was 552,842,000 plus 375. So looking at that, let's see how much volume we have right now. Again, the market doesn't close till 4, so they're still trading. But again, that day the volume was 552 million. And right now has 455 million. Sorry, 445 million. Yep. So broke the low, lower low. Currently less volume. Doesn't close till 4 p.m. So it doesn't tell you the whole story right now. And let's go to the next. Tesla. You ever heard of that company? Right off the bat, look at the chart on the far right. The high, 2024. So we never even tested that this year. It's underperforming the NASDAQ. Made a new low for the year. Loser. And you can see here in the chart in the middle of the weekly, we broke the low of last week. We also made a new low for this year. And you can see on the far left daily. Also has earnings come up soon. Earnings are April 22nd, after the market closes. Go here to the watch list. Right there. Yep. It's the only one that has apparently earnings. Of the Magnificent Seven, it's the only one apparently has earnings this month. That will have an impact. So take this back to the stock index. The NASDAQ 100. NASDAQ 100, again, has 100 companies. It's a very diversified index. Compare those Magnificent Seven stocks. Hey, I choose a good stock index. You go ahead and choose those individual stocks, take more risk. Some of these companies, not necessarily the Magnificent Seven, but some companies will get delisted from stock exchanges because the value, they don't meet the requirement, as well as some of the prices of the stocks won't meet the requirement. There'll also be some institutions that manage these Magnificent Sevens that may be unloading them and putting the money to work other places. That's another reason the prices are down huge. Smart money has been unloading them. See this middle chart? See this consolidation? A lot of smart money was unloading technology last year and putting the money in other sectors, which I showed in my other videos. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching.